And good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, May 12th, 2022. Always interesting here in the NASDAQ, and always interesting when we are in a larger impulse wave, an impulse meaning directional wave, like we have been since 15,269, basically. But we've been working our way lower. And today, the NASDAQ managed to dip its toes below 11,700, which you have to admit, we're down and now we're being persistent, and the sellers are not too worried about breaking 12,000. There are plenty to sell down there. But once again, what took place is that the turns were just as volatile as the declines. And so again, I just want to make a comment on that in the way that the volatility is so welcomed because it is producing bigger swings up, bigger swings down. Now the trend is down, so that's the area that I'm expecting the larger runs. But the turns that we're getting, so in other words, the market basically this time dropped from, we're going to say it dropped from 12,553 down to today's low, which was 11,690, we'll call it. A decent drop. So the rally back up so far was, let me see, 300 points, 400 points. So they're decent. They're pretty decent moves. And so as long as we can get them in both directions, it's just opportunities galore. That's all I can say. And it's so not being bullish and not being bearish. I know I'm going to talk about this a lot right now because it's really important that you don't come in wondering, when can I get bullish, when I can be bearish? It's like, that's not, you're a trader, you're trading. You don't care. You want both because you want this volatility. And it comes in both directions. Play it. Don't worry about why. Because in all honesty, we are in the corrective process. So we are going to continue to go down, but we're going to get great rallies too. So we're going to get both. And some are going to be playing. What you're going to see the shift, if you're an options trader, you're going to see the shift is starting to go to the weekly. And it doesn't really start until the beginning of that week. And then there's all the play and all the volatility comes right up and lands in those options. And it's in the various ETFs and in the options on the S&P, the spiders, the Qs, the S, triple Q, they're all in play. And so again, I just want to say there is plenty to trade. People want to trade. Now, whether they're right or wrong or whatever, who cares? They're out there trading, and they're trading at all levels and all prices. Why wouldn't we want to participate? So now back to today. Bigger picture, what I've just added, I put back on, which we've seen before, but here are the fibs for the intermediate wave 3 extension. So right now, the market is kind of honing in on where intermediate wave 3 would be equal to intermediate wave 1, which I definitely don't look for. I believe the market will pause there. We might even get a bounce there. But there are still additional lows to come. So what we have is 11,465, I'll call it. And then the break there drops us to 10,567, 10,011 or 12. But here's the ticket. And it actually, like inflation, has gone up a little bit. And so that low at the 1.618, where wave 3 would be 1.618 times the length of wave 1 at 91.14. And if it comes in above that, that works as well, because what we're looking for, of course, is the structure itself. So again, dropping down on the hourly, We remain in that process. Let me just go back up to the 4 so we can get more of this. We remain, there's the minor 1 and 2, so we're in the minor third. And within that, we have minutes 1, 2, 3, 4, and we're in minute 5. And within minute 5, let's start right here, it is subdividing. And it could subdivide big. I can put the 1 here and the 2 up here. That does work, but that means that this Follyville, because what would happen again, we're doing another 1, 2. This is the series. And as somebody commented that, and it was right here through this channel, that these are just additional subdivisions, and they could be 100% correct. And if they are, as I've been telling you, it falls off another cliff. We fall off a cliff, and then they keep trying to buy it and buy it and buy it, and we fall off another cliff. And that is kind of getting confusing for a lot of people. But again, this, I believe, is the size of this particular correction we've not seen. Or the last time we actually saw it would have been 2000 to 2009, which was a 9-year correction. And within that correction, we had a solid decline, an incredible rally where during that rally, which is a B wave, the Dow went to new all-time highs, the S&P almost, the NASDAQ not close, and then did a total collapse, and that was called the financial collapse of 2008, 2009. And from that level, we've had the cycle wave 5, which took us all the way up to these highs. So again, I believe that now that everything is electronic and there are many, and everything is quantitative, that's why we get a lot of these types of moves. I'm getting more convinced, but nonetheless, I'd rather play it than fight it or try to wonder why. Because why we're off trying to wonder why, it is moving, it is giving trades, it follows through. We're getting solid signals from when the moving averages, again, on the shorter time frames, on a 5-minute, a 2-minute, a 1-minute, a 30-second, galore. Opportunities and signals galore. Follow through, even non-follow through, where you're just taking a shot. If you're wrong, you may not have to wait more than another 30 seconds and it comes back into the money for you, or you get out, take a small hit, and the next trade just brings you back. There's that much to do. I do not know how long it's going to last, but while it's there, why not take advantage of it? Now, for tomorrow, really, the way that the patterns are forming, it does tell me that we have additional downside, even with this. But here's what how I'm going to leave this. Let's just open this up, take a peek. I can bring a 1 to here, a 2 to here, and then I got a 3, but I don't think so. I have to do a 1, 2 again. And then what is this? Another 1, 2. And why? It's because of these huge swings after these drops. But the patterns are getting consistent. Big drop, big rally, big drop, big rally, extended out. Big drop, big rally, big drop, big rally. We went back down and, on a closing basis, we put in a new low. And then we put in this big rally. So I think that we have to leave it, that we can continue up. We have the 50 up next, and that's at 12,070. And if it's truly going to be an ABC, it'll be flat, and I wouldn't be looking for much above 12,133-ish. And then the next leg down starts in. Now, I want to go back out to that 4-hour, and I want to drop this one. So I'm going to show you now. We're going to take a look at that 5th wave and what that should look like. And here again, let me open this up, and we're going to take for wave 5. We're doing wave 5 is doing really well, by the way. So it all is fitting quite cleanly. That's actually, they tell me where that high is. Okay. That's 71. That's a little bit too high. It's 48. All right. Let me just 10,000. 48. So for the minute wave 5, what we have, 10,943. And that's where it's going to be 1.618 of wave 3. And I think that would put it the longest. So we've already surpassed the 100. We've gone back. We've rallied back up to it. Now, I could try to get itself back above the 12,000 level. I could do that overnight. Tomorrow's options expiration. So we must just get into the habit that every Friday is an options expiration, some bigger than others. But now they're all getting pretty big. And the reason being is we are slipping and sliding and driving through strike price after strike price after strike price. In Apple, they got smart and they added one every dollar. Every dollar. Probably to try to take some volatility out of the stock. I don't know, but it managed to go through 7 of them today from low to high and then back and then back. Apple was absolutely bonkers today. And a lot of people getting out and a lot of people getting in. So it is repricing, repositioning, all kinds of things. And that produces opportunity. So tomorrow, I'm sure it's going to continue. If our volatility continues in both directions, it's going to be another spectacular day. You'll be very tired at the end of the day because you really have to pay attention. So tomorrow, what we need to bear in mind is that we can come back up and retest, if not try to get a little bit above. But being that this is flat, so we got an A, a B, and if we get a C wave, it should be a flat. You can go a little bit above it, but I'm not looking for it to break out here. I mean, breaking out to 12,000, that's enough. But I'm not looking to make a major break towards 12,300, 400, et cetera. But if we can get above that 50 on that basis alone, it kind of opens the door for it to go to the next level, which happens to be a Fibonacci number. And this would be a wave 2. But I just don't want to see it up here. Because if it is, it's a wave 2 of that. And that would be taking it back to that high. It's like, no, don't do it, guys. Don't do it. If it does, it just kind of puts this into a little bit more of a completion point for that 5 and for that minor third. And we're into that larger 4, but I would expect it to start better than this. So either this is 1, 2, and we're just going to blast. And that would put more credence on that was the low of that minute 5, of the minor 3. And now we're doing a 4th wave. Correction, bounce. And we could put some fibs in there, but not necessary right now. But if it breaks and keeps going, then we know we got to run retracements from there to there. And you're looking for 618. That's at least going to go up and give a test, if not way more, on that hourly 200. So that would do all the upside, but I'm not looking for that much. But should it occur, we break and run and go above and above, well, then we know this is where we're headed. But just on a moving average basis, a solid break above the 50 opens the door to get to the 200, and that would be the next logical target. Okay, downside. We have 11,560, 11,320, I'm going to say, to 23, and then 10,943. That's what I'm thinking. This is all very acceptable as well, because we're already down. But the fact that if this is 1, 2, and it can, I mean, we got to start doing the 3 and a 4 and a 5 and a 4 and a 5 and 4 and a 5. It just, the amount of subdivisions is what really does puzzle me a little bit, but it resolves itself. And so that's what I'm waiting for. I need to see where this thing is going to resolve and in what manner, and then we can fill in the blanks in terms of the count, and we go on. In the meantime, we just make allowances on both ends. Definitively, we could turn and just drop, folks. We really can. And what's going to kick it off is, again, you can see the moving averages are not in the way. So there isn't a whole lot of support moving averages wise, but they'll start to turn and it'll get more angled down. And this starts to turn, it'll just go right back. And we'll get moves like this. That's going to support, just like it did here. See, the 20 just turned and kept going. They bring it down, the 20 will just do the same thing, go down, just walk it straight down. So on your hourly chart, when your 20's walking the trade, that's pretty solid. That's your stop all the way down. So anyway, I'm going to leave it right there. Tomorrow should be interesting, or they get it to a position where they're all happy, they want to relax, and they convince everybody not to trade and just leave it right where it is. But we'll see. Our next update will be on Sunday, the 15th.